Many of the points that I would have liked to make, to be fair, have already been made at this stage, so I won't abuse them or try to take too much time over it. I mean, in general, the EU and accrual accounting, I would say reasonably advanced. As you can see, 16 countries out of the 27 used to be 28, are using the accrual basis. 6 are transitioning to accruals, including my own country of Ireland at this moment in time. And those still on cash, Germany, Italy, Luxembourg, Malta, Netherlands. But at some stage in the future, even though currently they don't really have plans to move to accrual or even to transition over time, over the next few years, I'm pretty sure that given IPSAS and its harmonization of accrual standards across the European Union, all 27 countries will essentially be using accrual accounting very, very shortly. Just some of the bases, and as I say, these are kind of details. These are the standards that are being used across Europe. And as you can see, we very, very much concentrate on those areas of fixed assets and inventories. And I bring up that point because, of course, we're going to speak about it in a little bit more detail tomorrow. Those, as you can see, around employee benefits cause the greatest problems. And even with IPSAS themselves, they cause some problems, having recently been superseded, the earlier benefits. In preparation for the introduction of the European Public Sector Accounting Standards, some research has been carried out about what they call the accounting and the IT maturity for the systems which will be used, for the current implementation of accounting standards and the IT infrastructure on which it will be based. And at this stage, we look at central government and IT accounting maturity and IT maturities are very, very similar throughout the EU. Quite high rates. Local government, strangely enough, is often that little bit better, which indicates that it can be easier for smaller entities to implement accounting changes and to introduce top-rated IT systems. Social security funds still cause some problems throughout the EU at this moment in time. In general, 21 countries issue either full accrual or very, very detailed disclosures in the notes to their accounts, which begs the question, what do the other 6 or 7 countries? Not so good in terms of their reporting disclosures. Again, that is something that is being addressed by Eurostat, the statistics organization within the European Union. Local and national reporting formats, their chart of accounts have been harmonized. And this is one of the main reasons why the EU has looked at the introduction of a European-wide accounting standards framework and environment. IPSAS at this minute in time, they are regarded as voluntary. There are differences between countries in the timing of the recognition of some transactions. And I list them there: the exchange transactions, grants and other transfers, social benefits and pension expenses, and tax and transfer revenues. IPSAS is being introduced with IPSAS is being introduced with the intention of all 27 countries using the same timings, using the same standards and the same means for recognition of accounting events. I just bring this one up again because I know it's going to be discussed about in quite some detail tomorrow. For those Of the countries, the EU, the 27 plus one, the one being, of course, the UK, physical inventories are carried out for land, military, IT equipment, buildings, civil infrastructure by practically all of the countries involved. But that doesn't mean that at the end of the year, they actually disclose those physical inventories as part of their financial statements. And this has been mentioned before. These reforms for IPSAS, they're generally carried out as part of a much wider PFM reform agenda. And we have mentioned all of these points to the extent, yes, it is to increase transparency and accountability in our financial reporting, to create political public awareness on the public finances, better cost information, greater efficiency, of course, in business processes. And it's essentially accrual accounting is about resource management, about maximizing the investment return and service delivery for citizens, and of course, improved macro fiscal forecasting. But the questions then were generally asked about, have the reforms on IPSAS, have they been fully or partially successful? I mean, external users are always not, accountants always know for sure that yes, these have been very, very beneficial. But managers, politicians, and other users are not always so sure that IPSAS is giving them more information or more valuable information in terms of managing their departments and those physical resources. And as I say here, a lot of countries, and the reason they don't really want to move wholeheartedly into IPSAS is they still believe that the cash budget balance and the net lending are more important in terms of their fiscal management. These, I think, largely the limitations of IPSAS have been dealt with. So I'm not going to go through those. My friends in the time police are keeping an eye on me here. But for me, and again, this is just a summary of the European Public Sector Accounting Standards project. This came about as a result of a budgetary directive framework 12 years ago now, actually, at this stage, where in a bid to harmonize and to provide greater transparency and accountability in the accounting and the financial statements throughout the European Union. The directive was issued that we should harmonize all financial reporting within the Union by having a common set of public sector accounting standards. These will, of course, be based on IPSAS, as has been mentioned before, but there will be much greater specification of the accounting approaches to be used. This is to ensure comparability again and harmonization. They are not completed yet. It is envisaged that they will be ready by 2025. Considerable work is being done at this minute in time to analyze the impact, shall we say, of all of the individual public sector accounting standards and their use throughout the European Union. And when that is done, it is still a plan that a whole suite, I don't know if there will be 35, 39, whatever is currently there, probably much less, but a whole suite of accounting standards for the European public sector accounting standards are intended to be issued by 2025. And I just thought I'd throw this in for interest. Given that the plus one was the UK that had left, but the EU, and of course, from my own Irish perspective, I just wanted to show the difference, if you like, in approaches between the two countries. And again, many of the points have been alluded to to date in terms of what's important and why some implementation systems work or methodologies work and why others don't. because both countries have looked at the introduction at the same time, about around the mid-90s. Studies were done, and there's close cooperation between the civil services in Ireland and the UK. The UK decided to go ahead with full IFRS accounting at that particular time. It later moved on to resource accounting, then it was to whole of government accounting, and currently they're using one called CLOS, which is clear line of sight system of accounting and resource management in the UK. But as we said, over time, the paths that they took diverged quite significantly. A 10-year transition period was mentioned, and that is exactly what took place in the UK, for instance. And the point has been made before, and it should be emphasized, the main reason why it worked so well in the UK was because of political commitment from the highest level. Both the Tory government, which left power in 1996, and then the Labour government under Tony Blair came in for 10, 12 years, were very, very committed to adopting IFRS and international public sector accounting standards. In the beginning, there was an issue in the UK, and indeed in Ireland, with the FMIS. Their IT infrastructure was not up to scratch. Significant investment had to be made for that. And as was mentioned here again before, accountants, a whole raft of accounting skills were required. Cost is a major issue in the introduction of IPSAS and not always considered fully. I do remember, and I was looking for it there, reading a report on the whole of government accounting system introduced in the UK. And I think it was about the year 2012 it was written. And it had estimated that at that stage that the accounting reform had cost in the region of £1.5 billion. That's $1.8 billion, I think, at today's rate, at exchange rates, but that, as I say, was a figure back in 2012. So it is a very, very costly exercise. That takes into account all the training, the system upgrades, the purchase of computers and everything else, internet connectivity, everything else that goes into having a well-functioning system. In the beginning, the information wasn't used as they expected. It was mostly used by the accountants. But in the UK, what they did was they took a conscious decision to make sure that all managers had a good understanding of financial accounting and reporting and the processes involved, and why it was so important that processes were followed diligently and accurately. There is now a much greater awareness of asset ownership and use, with the caveat, they say that, well, that might have happened anyway. But political understanding in the beginning was limited, but it's now much, much better. And I finished this one by saying that accrual accounting should be accompanied by accrual budgeting. That actually was a decision of the British government. That's not a recommendation I'm making here and now. But that was a decision by the British government that, look, if we're using accrual accounting, then we can move to accrual budgeting, which they did. The road in Ireland, we call it accounting pragmatism. Maybe we just did not have the energy, the commitment to it that the UK showed. Because from an Irish perspective, this was largely driven by senior members of the civil service who had travelled to Australia, New Zealand, and indeed to the UK, and came back with all these great ideas for reform, but the politicians were not convinced, mostly because the results were not, the benefits and potential results were not portrayed to them in a way that made it a viable product for them. Each government department, instead of having a harmonized across-the-board approach, each government department was given permission to decide whether it wanted to proceed or not. Again, that's lacking full cross-government commitment in that. And as soon as they began to see the costs, there were other issues that we needed to deal with. So they kind of just left it and concentrated on other areas of government policy. And today, of course, the Irish government has just produced a new strategy where it will intend to move to IPSAS. And I think I'm nearly finished today, but this is just to show the comparison in terms of the accounting maturity and IT maturity as a result of the different approaches that were taken. As you can see, the UK government is practically at 100%. It's got very, very advanced systems, some of the most advanced systems in the world. And Ireland, of course, we are lagging behind quite considerably in terms of European performance. And this is my last slide. They'll all be glad to hear. As I said, we are now currently looking at introducing, we're transitioning to accrual accounting. And this was the advice that was given. The active support from political leadership is absolutely essential. And that planning and preparation must be dynamic. You must move along as reforms are implemented. You must constantly evaluate and adapt. Pilot projects, as previously mentioned, are also very, very useful rather than trying to adopt a one-size-fits-all. Remember your context. You are the public sector. You are not the private sector. And each country must adapt in tune with its own culture and its own development strategies. I do recall Peter Drucker many, many years ago where he outlined that culture will beat strategy every time. So you need to bear that in mind in particular. As I said before, recognize all stakeholders, managers, Parliament, and you must ensure that capacity is built at all stages because the skills required at the beginning are not always the skills needed at the end. Make sure that your skills develop along with the systems as you implement. And I think that's me done. Thank you all very, very much.